very much for being here on a Saturday at 5 p.m. Really appreciate it. How many of you are attending this event for the first time? Wow. That's very cool. So this is very interesting. This is actually, I think, our 5th event. And we keep getting so many new, let's say, attendees every event that we do, which I believe is a very good sign. I think the last event we did, which was in March, we had around, in here, 120 people. But it was in the middle of the working week. It was not the weekend, so we wanted to do it, hopefully, in a time when the traffic isn't as bad. And apparently, it doesn't matter. You do it Saturday or Sunday, it's all bad. So it doesn't really matter. But it's a learning experience, and we pivot. That's what we do, correct? So my name is Moustafa Mahmoud. I am the founder of the e-commerce in the UAE community. We started in the crib in December 2013, and we were just, I think, 10 people at that time. And we had a small meetup group, and there were not many people. And in 4 short months, we became 560, which is really cool. And I was very surprised all my life. I've been here in the UAE since '91, and I was all surprised, why is there no community for e-commerce in the UAE? There's a community for everything. If you're a kite surfer, there's a community for that. If you're into fishing, there's a community for that. But for e-commerce, which everybody keeps talking about, and there's so much hype, and it's a multi-billion-dollar industry, and there's no community. And I don't understand how can an industry survive, and how can an industry grow without a strong ecosystem to back it up. So we decided to launch this, and we got support from all the let's say, players in the market. And we try to get guest speakers in every event that we do moving forward to support us in this mission, to share knowledge with the rest of the e-commerce community. And today we have 3 really, let's say, cool people who are gurus in their domain. They have been kind enough to come and be here with us today. We have Omar Sodoudi, who is the CEO of payforward.com with us today. We have Sebastien Reis, who represents checkout.com here in the UAE. And we even have Omar Sodoudi, who is the CEO and founder of swipezoom.com, all with us here today to support you as well. So I'm just going to give a very brief talk. Apparently people became tired of me talking every class, so I tried to make my presentation shorter and shorter, and I tried to give more chance or more time for other people to speak. But I think it was, I just want to give a very, very brief overview on the payments industry. From my perspective as a merchant, I own my own e-commerce business, and well, it's my 5th e-commerce business. And I keep saying this in every presentation, by the way. My journey with e-commerce in the Middle East, and how I started in 2005, and how I failed miserably. First time, second time, I failed as well. Third time, well, I started succeeding. 4th time, I sold it for a 3x revenue, and I'm at my 5th startup. And it was this journey that actually gave us inspiration to what we call as MENA Commerce. So MENA Commerce is the first pure-play e-commerce training and consulting and research company in the Middle East. And it's something that's never been done before, from a pure focus on e-commerce. And our objective was to help people succeed online. We have a database of all the e-commerce stores in the UAE and in the Middle East. And can you guess how many stores exist in the UAE alone for e-commerce? There are like 1,000 e-commerce stores. And 97% of those stores are not making any money, and they disappear within the first 3 years, and they just become zombie websites. And only 3% are actually surviving and making any money. And that is because there's a proven formula to success in e-commerce. It's not an art. We're not artists. We're not Beethoven or Picasso or whatever. We're businessmen. And in order to succeed in business, you have to have a working plan and keep executing against this plan. And our vision was to be able to share this formula and to share our experiences with everyone who wants to get into e-commerce. E-commerce is a very exciting business. It's a low risk, let's say, low cost entry to entrepreneurship. And that's why it's loved by many entrepreneurs across the world. But there are many, many challenges in running and operating a successful e-commerce business, especially here in this part of the world, where we're just starting to see a real infrastructure being built to support all the entrepreneurs out here. So it's a long journey, but we have to start somewhere, right? So, this is the agenda I prepared for today. I just want to give a very brief overview on payments for dummies. I'm sure most of you know this already, but we have to go through it. The mechanics of payment solution, what does it look like? What are the obstacles that people face? And I want to hear from you as well as me, because I face many obstacles. When I started in 2005, you can imagine the sort of struggles I had to go through. You're lucky today, you have all these payment gurus with you. 2005, oh my God. We're going to talk about some of the market solutions that exist today. I'm not going to spend too much time on comparisons, right? That would take a long time, but hopefully in the Q&A, which was going to be significantly long, we can discuss that. We're going to have the coffee break, and then we're going to give the mic over to Omar from Payfort, and then to Sebastien from Checkout, and then we're going to have Q&A session. So the payments world, worldwide, and anywhere except here, is a very, very mature industry. You have many players to support you if you're an e-commerce startup. And it's very, very easy to do payments cross-border, except for the Middle East. And when we started doing our community events, and we started getting, let's say, we started publishing those questionnaires and asking people, what do you think should be the topic of our next seminar? And 90% of the time, people would say payments. Every time, payments. I understand it's a challenge. However, there's much more to e-commerce success than just payments. There's a whole bunch of stuff that you need to figure out before you reach the payment stage, which is the checkout stage. There's so many things that you need to take into considerations and factors to consider, which are crucial for your success just as much as payments. And we tried to go through these in the initial seminars, but eventually we gave in and we said, okay, let's talk about payments. So, what are the two main methods that we, let's say, consider when discussing payments in our region? You have solutions that I'm sure most of you are familiar with, which are all-in-one. They are the gateway, they are the acquirer, they're everything. They're an all-in-one solution, which is very, very easy to do with. You register with a single service, and you plug it into your website, and that's it. And then you have the traditional way, which I'm sure you face frustrations with, which is opening a bank account, with or finding a merchant bank and opening a merchant account with your acquiring bank, and then figuring out payment gateway part, and then integrating them together on your website and figuring out that solution as well. So these are the two main solutions. Each one has its own pros and cons, and there's no way to say this is bad or this is good. For each case, it's different, and it's for some businesses this makes more sense. Some businesses it doesn't. So it depends on you. And then there's obviously the third method, which is cash on delivery, which we keep talking about in all our events. Cash on delivery is not really e-commerce, because e-commerce means commerce transacted electronically, correct? But cash on delivery is not online. It's not transacted electronically. However, in our very special region, we consider it as e-commerce, and it keeps showing up in all the statistics and all the reports. I don't know, but it's not e-commerce. And I don't want this to be a COD bashing campaign. I think the last session was a COD bashing campaign. But and you can see the smiles from the people who attended. But COD is very bad for everybody. For you as the merchant, for the customers as consumers, and for the industry as a whole. Because one that I think they did an interview with me, and I went, oh my God, 2 hours I was bashing COD, and they published all this stuff online. And the problem with COD is that it's not a commitment to pay, it's a promise to pay from your customers. They just promise to pay, but there's no actual proof. You send out the goods, you send out the merchandise, it may reach them, it may not reach them, the sale might close, it might not close, we never know, right? And then you have to deal with all the complications that entails you. For some businesses and some regions in the Middle East, it makes more sense, probably, but in the UAE here, everybody has a credit card. Yeah? People use them to pay their bills, people use them to buy their plane tickets, people use them to, do the DIY, the salat. People have credit cards. They just choose not to use them with some e-commerce businesses due to the lack of trust, due to the lack of confidence, and due to convenience. They say, okay, we are predominantly cash-based society, as the Middle East. Show me the goods. If I like it, I will pay. If I don't, I will not. It's because you're offering that option. Anyway, it's a whole big debate, I don't want to get into it right now, but I believe that the only real change we're going to see in the industry is as more and more merchants come on board and say, hey, we are not going to support cash on delivery. If you want to buy from us, you have to whip out your credit card. Otherwise, we're not going to entertain you. And there are some successful e-commerce businesses that have already done that. Jadpado, I think also Groupon, and they have a big help section on why they do not support COD. And if you talk to the CEO of Jalapado, Omar Sodoudi, when people ask him, when you stopped COD, did it affect your business? And he said, no, our growth is on track, we're actually growing, we did not suffer from that. But maybe because this demographic is very mature, and they have, they're very comfortable using their credit cards. In different demographics, maybe jewelry or fashion, it might not be the same. As I said before, because we don't have actual primary data, it's very hard to build research. And when we started in e-commerce, one of our visions was to avail this data live from the merchants and from the industry and produce actual intelligence to people to understand. And we're building a very big report on payment methods and, let's say, the impact of cash on delivery on the industry. And hopefully it will be available soon. So the traditional method, when you're talking about checkout.com, PayPal, 2CO, and all the other payment, let's say, service providers, customers buy from you from your online store. You have only one contact with the gateway. They take care of everything in the back end, which is processing the payment, settling the payment, and transferring the funds to you. And you just get a report from them saying that it has passed the fraud checks and so on. And the payment is clear, and then they have a cycle of, let's say, X number of days before they settle the payment into your account, in case there's a chargeback from the customer, because customers have the right to decline the transaction in case somebody stole a credit card or they didn't receive the goods. The traditional method of having a payment gateway plus an acquiring bank is a little bit more different. You have the technology, which is the payment processing center. You have your website, and then you have the merchant bank, which in our case here in the UAE, there are three very popular solutions, which is Masterclass Bank, you have NBank, and Network International, if I'm not mistaken, correct? There are some other banks, I think Abu Dhabi Islamic Bank and CBD, but they only offer to a certain set of clients, they're not for anybody. So when you're dealing with these guys, a lot of other complications come into play, which I'm sure you've faced before, such as the security deposit, such as, let's say, creating a risk profile for you as a merchant, and it gets a little bit iffy because these guys don't really care about small transaction businesses. They make their bread and butter from the really big customers. For them to take the risk and to undertake the risk of small merchants is not very attractive for them. You'll hear a lot of people saying we support, we love SMEs, we love online, but when it comes to the actual reality, things might be different in some cases depending on the nature of your online business. So what do we have in the market today? So I think I divided them into three logical, let's say, segments. You have the all-in-one payment processors. You have the technologies that work with acquiring banks. And you have alternatives for credit card payments, right? Because you have credit card payments, but you also have prepayment technologies. So does anyone here use one card? Does anybody have a one card account? No? Okay. Does anybody have a cashew account? All right. Because you're ex-soup. All right. And your cash, I think, is Ukrainian? It's British. It's British? Okay. So these are prepaid cards which you can register with and top up using your credit card or a bank transfer or whatever. And then you use that card to shop online for people who support that payment. So you don't need to enter your credit card details anywhere else. This is very beautiful for people who play online games, Warcraft, and I don't know, I've never played this, but it's a very good way for them to do the payment on those websites. There's something called PhilSpay, it's a Malaysian, I think, service that especially caters to this demographic. But for some reason, these things didn't catch up. I mean, as you can see from us over here, maybe one or two use them and the rest do not. What they were trying to fight is the cash on delivery concept. They said, okay, so people aren't comfortable using their credit cards, so let's create this prepaid concept for them, which alleviates the problem of trust. But the trust is not the problem. The problem is convenience. People just find it convenient not to commit to pay. That's it. That's my theory. I might be wrong, but this is what I believe. Something like Gate to Play, for example, is a bit unique because when you implement Gate to Play, the Jordanian startup, you automatically, I think, get 15 methods of payment automatically, let's say, enabled on your website. So Payfor, I'm not going to talk about them because their CEO is here today. I think he's the best one to talk about. Innovate are very interesting as well business here in the UAE who offer very, very secure solution. And there are many rumors about what Innovate is going to do as a next step. Let's wait and see. Something else that started here in the Middle East, and I thought I would talk about it because we had the CEO of Teller.com in our last session. But he didn't have a presentation, so he was just speaking, and many people didn't get what is the idea of Teller.com. So Teller.com, founded by Elias, who was the ex-MD of PayPal, is a unique payment solution. And it's not just unique for the Middle East, it's the first of its kind worldwide. So what they're trying to do is something that has not been attempted, let's say, before in the online payments industry. So they're going to be offering a traditional payment gateway, but they're also going to integrate back-to-back with the logistics providers. So as soon as someone buys from a Teller-enabled website, they place the shipping request directly with couriers like Aramex, Skynet, Comex, and stuff like that. And they're going to do something that they call as express financing. So they will give loans, $10,000, $100,000, up to merchants who have a good credit history with them in order to buy stock. And as per what they said in their online interview, they will be able to settle with merchants within 1 or 2 days from the transaction actually taking place. They're going to be launched in the Cards and Payments Show. How many of you are attending the Cards and Payments Show in May? All right, so you can register for free. It's going to be, I think, in the Jumeirah Beach Residence Beach Hotel. And it's going to be 3 days, 13th, 14th, 15th of May. And I think it's worth attending if you're interested in this industry. And it's growing. So this is based in Dubai. So Teller.com covers what? It covers Asia, Singapore, and China, but it's based in Dubai. And there are other payment solutions that are coming up. So recently I came across this gentleman who has this website called whitepayments.com. And I spoke to him. And actually, he approached me. And he said that he's trying to create a service which is similar to Stripe in the UAE. And my belief is that whenever there is demand, eventually supply has to catch up, right? So there's big demand for this area at the moment. And you can see more and more people who are interested to actually launch businesses. Whether they're successful or not is something up for debate based on their actual data. But life today is much, much easier than it was in 2005, in my opinion. Right? So what is the pros and cons of having an all-in-one solution versus the traditional solution? This is a question that I'm going to leave for the Q&A session at the end because I would like to get input of our guest speakers today. But this is something that I get asked a lot. Why should I go with this and why should I not go with that? And this is something that, again, I'm not the best judge of, I have an opinion, but I will leave it up to the guest speakers to actually discuss. And when you speak about obstacles, what is the biggest problem that merchants face today? So if you're going with the traditional method, I think the biggest problem is actually getting an account approved by a requirement. And that is one of the major problems. If you're going with an all-in-one solution, PSP, the problem is getting your account reviewed and accepted from, let's say, from the risk department. And the cons is that some days your account can just suddenly be shut off with some providers for no reason. They just say, sorry, we're not going to process your transactions anymore. So I mean, and the obstacles is that some of these all-in-one solution providers as well, they will not give you any, they will not entertain you unless your website is up and running and it's a functioning website and you have, let's say, some sort of credit history and stuff like that. So there are many questions, there are many, let's say, obstacles that arise when it comes to payments, but I would like to hear from you as well at the end of the session when we come to the Q&A. We want to hear about the obstacles that you face and we want to help you to address them and to maybe overcome them. Before I let's say, end my piece, which is not very long, I just wanted to give you something to think about. What if Facebook starts, and it's something that's probably going to happen very soon, what if Facebook starts offering payments? So you can pay through your Facebook account. And it's something that has been rumored for a very, very long time. How is this going to change the landscape for everyone? For us as merchants, for payment service providers, and for consumers as well? Would it be easier for them and more convenient? I don't know. But at the end of the day, in my opinion, it all comes down to trust. It's all about trust. If people don't trust you, they will not be comfortable giving you their, what they consider confidential data, the credit card numbers. And with 1,000 e-commerce stores, for them to go and trust every merchant takes time. I know people who it takes them 5 transactions with the website to actually consider paying by credit card later on, if they trust it. And some people just never do it. And what we did in MENA Commerce, and this was one of our, let's say, missions as becoming an authority for e-commerce, is that we created a service known as Verified by MENA Commerce service. So what we do is we go to specific e-commerce stores who approach us, and we vet their business model, we vet their operations, we do our own due diligence, and at some point we provide them with a verification seal that they can actually put on the website. You can say, so this has been verified by MENA Commerce. And this is our attempt at helping with the trust issue today. So that was it for me. Very short presentation. The rest of the session is going to be led by Omar and Sebastien. Before I check out, if you have any questions, you can ask them to me, or you can keep them to the Q&A session. Any questions? All right. Omar, you're up.
Hello everyone. First of all, thanks Moustafa for the invitation. And just a quick introduction myself. My name is Omar Sodoudi from Pay for Action. I'm joined with Mahmoud, who's one of our product development managers for alternative payments. And we always like to come and talk to entrepreneurs and startups and people that want to get into the business. Just to quickly kind of discover the audience today, who currently has a product that is live on the internet? Okay. And who wants to launch a product? And show of hands, is your product B2B model, B2C model, B2B model? Or both? Both? So who's B2C? Yeah. B2B? Huh? And who's planning to launch in more than one market?
We're in about 67 markets.
67 markets, wow. Who's launching in the UAE, or actually the primary market is the UAE?
We started by launching in the UAE, but we got markets.
Okay. And delivery channel, is it online, is it website, app? Okay. Show of hands also, is your product or service? Product? You're delivering a physical product? Service? Okay. Any digital products? Okay, very important question. Do you know your target audience well? Who is your target audience? Do you really know who they are? What they're going to choose to pay with? What are the challenges? Like Moustafa said, the trust issue. If there's any trust issue with you or any other.
We started in 2001, so we built up the application and we have trust.
So all these questions just food for thought for you. So we will go through that presentation. Pay for it. We usually don't sell a solution to a company or a startup. We actually try to come up with a payment strategy for you. Because I can say, take credit card acceptance and your audience are between 14 and 18 years old and they're playing online games. Is that going to really help? No. So, as Moustafa mentioned, what is really important for me to know about online payment? So these are the 4 things, Minimize friction when it comes to the user experience. With payment, there's always a friction. Do I use my credit card? Do I have a credit card? Do they have alternative payment methods? So you have to ask yourself, how can I minimize friction? We're going to discuss that today. And also, how can I manage security? We've all heard a few weeks, actually last week or 10 days ago, about the heartbeat issue. As a startup or as a company, are you exposed to all these security issues or not? Do you have the manpower? Do you have the competencies in order to do that yourself, or do you want to also rely on a business partner that can help you with this process as well? And then, of course, risk. A lot of the startups, unfortunately, when they come up with the cost of doing business online or the cost of online payment, they're always looking at what is the setup fee and what is the transaction fee, but they never consider the risk, the cost of risk. If you get a chargeback for $1,000 or $5,000, how much is that going to impact your bottom line? If you're making $50,000 a year, that's 10% of your income in the first year. So you have to consider that as well. And of course, most importantly, how do I get started? Like Moustafa said, there are a lot of different options. So which option is the right option for me? I hope with everybody talking today, we might hopefully shed some light on the payment industry. So the first thing we want to talk about is how do we minimize friction? And I think it's know your customer in their role. So if you're in the UAE or outside the UAE, or you're focused on markets outside the UAE, you need to understand that very well. So again, if somebody's not, our first thing is that if the user is not online, they can't really pay online because they're not really accessing us on our online channel. So if you look at some of the top markets, Egypt around 40 million, Kuwait to Saudi Arabia, UAE we're around 6 million right now, Morocco around 15. I mean, of course I can go on and on and on. There's around maybe 130 million internet subscribers in the Arab world today. And if you look at the top 4 markets in terms of value, and you look at the e-payment penetration, or actually people paying online, you look at Egypt and find it at 7%, and there's a reason for that. And you look at UAE at 67, or actually at 70%, and there's also a reason for that. What do you think is the reason? What is the big disparity there? Well, one is at 7%, and one is at 67. Actually, KSA is over 30% today. I need to update my presentation. Why do you guys think this is the case? Security. Actually, there's also supply and demand. So the credit card penetration in Egypt is 9%, so it makes a lot of sense. And per capita credit card penetration in UAE is over 89%, meaning there's over 5 million credit cards in the UAE. We're like 8 million people, so...
You receive 5 calls a day. You receive 5 calls a day.
Exactly. So how many credit cards do you have in your pocket? 2, 3? So you actually count 2 or 3 times. In Egypt, around 7% of Egypt have a credit card. That's the first reason. The second reason is that who's an expert? Okay. Who knew about e-commerce or e-payment before they moved to the UAE? Exactly. So all these emerging markets, they're actually still trying to get to know e-commerce. My previous position was the general manager of Souk.com in Egypt, started it for 4 years, and people would call and say, well, I want to buy something. It's like, okay, press the buy button. And Moustafa was talking about, COD, of course, Souk offered COD. It's like, yeah, but if I press the button, you're really going to deliver the product to me? So, again, the awareness is still not there, but it's definitely rapidly growing. So you really have to understand the KYC and who is your customer, because you don't want to offer something and say, oh my God, they're not buying, they're not pressing, they're not using credit card, they're all opting for cash on delivery or alternative payment methods. You really need to understand, so you don't get disappointed, and you don't want to blame the customer at the end of the day. The customer is never ignorant. We are. If we decide like, oh, they're ignorant, they don't use credit cards, we haven't solved the problem for them. So what do people spend online in UAE? That's around, of course, airline tickets is the high, so 25%, and all of these are the different categories of what people spend online in the UAE. You have pretty much a lot of stuff over less than 5%. So you're looking at, for example, if it's a digital product, music, movies, events, all of that stuff. Again, that's where the cash and the UCash and the one cards come into play, because the target audience is much younger and they don't have a credit card. So that's why they opt for buying these products. It's never going to be an alternative for cash on delivery. It's actually going after the unbanked audience versus the banked audience. So in the Arab world, by the way, 50% is the global trend of the banked individuals. In the Arab world, around 18%. So we have a lot of room to catch up. So you shouldn't blame a consumer for not using their credit card, because you don't even know if they have a card in their wallet or not. If they have a card in their wallet and they're not using it, that's another problem, which we'll hopefully discuss again today as well. So if you look at the issuance of credit cards, which we've done a research and looked at around the top 50 issuers in the Arab world, and we found that in KSA there's around over 13 million credit cards today. So that sounds like pretty good, but if you look at the credit card penetration for these markets, you find that it actually differs. So we're defining per capita, meaning that, again, how many credit cards issued in a market versus the entire population. So Saudi Arabia is at 50%. So if you're selling a product in Saudi Arabia and you only are offering Visa and MasterCard, then you're actually discontinuing 50% of the audience. By the way, PayFor accepts Visa and MasterCard, American Express, and alternative payments. I'm not trying to sell you out of the credit card. I'm just trying to make sure that you don't blame the customer for not using the credit card. The second issue of not using a credit card, like Moustafa said, maybe it's the trust issue. So like the verified by me and all these things will definitely help. So also Moustafa mentioned that 75% of transactions in the Arab world has been done with a cash on delivery, because we're still a cash-based society, whether you like it or not. We're still in that journey in terms of actually developing a cashless society. So, for example, we've done research and we found that 20% of transactions in Egypt online happen with a credit card. And we thought, oh, it should be a 30, it should be a 40, but guess what? Actually, the offline transactions, when you're going and buying something from the mall, also represents 20% of the transactions using credit cards. So it's not only about trust, but again, it's about motivation. Did you motivate your buyer to use a credit card or not? For example, again, when I was with Souk in Egypt, around 11% when we first started was the credit card percentage of transactions, and when we started offering free shipping for online payment, it jumped to 30% in a week. Why? Because now the customer has a motive to get the wallet out of their pocket. So how do you motivate your customer? Like Moustafa said, some of them will have a challenge with security, some of them will be value driven, some of them will be like, I don't want to share too much data with the site, I don't trust that merchant to begin with, I want to see if they can bring the product to me and then I'll pay for it. So you really have to know how or what the customer feels about your product. Do they really trust you or they don't? And if you look at the the credit card versus prepaid, prepaid is like the one cards and the cash use and the new cashes and all the prepaid credit cards that you actually buy. It's around 25% of total volume in the Arab world. And when Effective Measures did the research, 75% of customers said that they use direct debit. What is direct debit? Is that when you actually pay with your bank account. So how many people pay something with their bank account? You pay what, a utility, maybe an airline, but how many merchants that each bank has? 5, 6, right? So can you go to the bank and say, I want to add my website on online banking? You know, they'll say, how many transactions are you making? Are you making 10,000 transactions a month? Of course, yes, I'll add you. But if you're making 5 transactions or 10 transactions, they won't. So we're still trying to get to that of, you know, what we call direct debit. So in Kuwait, they have direct debit. It's called KNET. It represents 80% of e-commerce today. So I believe that the UAE central bank announced that they're moving into direct debits, and they made an announcement in Saudi Arabia last week. So we see that happening in the next few years in the Arab world. Of course, smartphones are changing the way we live. And a lot of you have apps. So again, another thing that you have to look at is the penetration of smartphones. Saudi Arabia and UAE are one of the top 5 countries in the world in terms of smartphone penetration. So how do you add a payment into the smartphone? How is the user experience? What are the payment methods? Africa, there's around, by end of next year, $200 billion will be transacted on mobiles in Africa. M-Pesa alone transacts $10 billion. That's what we call direct billing. But the operators in the Arab world are still not there yet. Only in Kuwait there are 2 operators offering direct billing at a low cost, because you can go to an operator and say, sure, of course, give me your product, I'll charge you 40% of the transaction. So that makes sense if you're selling a ringtone or gaming, but if you're not selling a ringtone or a game and you're selling a physical product, who would pay 40% to the operator? No. Again, of course, the internet penetration of smartphones went from 11% globally to around 17%. In our region, it's around 24%. There are users in countries like Egypt, Libya, Iraq. They don't access the internet actually from their laptops. They access it from their mobile because they don't have laptops. So again, are you building your environment on the mobile or you're just a web page? And I think one of the things that really increased online payment is the increase in supply. What do I mean increase in supply? Moustafa said that 1,000 stores right now just in the UAE. So because you find that abundance of service or you can pay your DIY bill online, that gives you a motive to actually start transacting online. So that helps an offline person who's spending money offline to adopt online payment. So when they adopt online payment from buying a ticket on Emirates, and then you say you can pay with your Visa card, they've gone through this experience before. So maybe you don't have to do that education to them, someone else has to do it. And of course, increased trust. There are 3 reasons that our trust increased. One, more trust due to using a merchant over and over and over again. So for example, Jabal was an easy decision for them, I know Omar. So he found that 60% of their customers are return buyers and most of them are using their credit card. So for him, it was an easy decision to make to turn off COD. But can you turn off COD if your 20% of your transactions are credit cards? You'll lose 8% of your business tomorrow. Again, you can lose it for 3 months, 6 months, a year. So you have to have a plan. Okay, if I turn off COD, what am I gonna do to bring back that business? Visa says we're the fastest growing region in terms of credit card transactions online. And of course, because we are all empowered buyers, if anything happens to us, we can jump on Twitter, Facebook, and complain. It took me an hour and a half to come here because I was waiting for a taxi for an hour and a half, and I was actually dying to go online and tweet and say, Dubai taxi, this is a fail, and all that stuff, but I didn't. But when that happens, usually companies react very quickly and they want to make sure that you're a happy customer, that you become a brand ambassador as opposed to a brand terrorist. So that really helped in terms of trust. So just briefly talking about PayFor, because we promised you that we're talking. So PayFor is part of Souk Group. The group, we've looked at payment and we said there's something wrong in this ecosystem. As Moustafa said, if you look at our slogan, it's called Powered by Trust. So we believe the word powered by represents innovation because we believe that there's a lot of innovation needs to happen in terms of developing the right product for merchants and for consumers. And the second portion of it is the trust. Right now we're in, when I say free markets, meaning that we support companies in free markets, UAE, Saudi Arabia, and Egypt. But of course, we can accept payments globally. And these are some of the online payments we accept, of course, Mastercard, Visa, American Express, Cashew. And the alternative payment channel, which Mahmoud runs, is pay at home and pay at store. So for the customer that doesn't have a credit card, or doesn't want to use their credit card, they can actually, pay at home, all the group buying sites in the UAE uses them with the exception of Groupon and talking to them. Instead of actually sending a courier company with the voucher, we actually dispatch as well a courier company, but we do it in less than 24 hours because on average, all the other courier companies, they take 3 days until you actually go to the customer. So we do it in less than 24 hours and we launch what we call a bullet service. We collect money within 3 hours. So ClearTrip uses it and you buy a ticket on ClearTrip and somebody goes and collects the money if I don't want to use it. And pay at store is simple. It's basically, if you don't want to pay online, go ahead, I'm going to send you a token, you can go pay it Enoch on Echo. The technology is linked to, through an API with the merchant, that the merchant will know right away that the money is being collected, and you can go ahead and issue the voucher, issue the ticket, and so on. Sorry?
Pay at home.
So pay at home is, we call it anti-COD. Anti-COD. So what happens is the merchant, as a merchant, by the way, we do not recommend it for e-commerce site to ship domestically because you don't want to go to the customer twice. You don't want to go to pay for the transaction and then I send the courier company to actually deliver the product. We usually recommend it for virtual goods and services or cross-border trade. So if I'm Sukkar or Market VIP and I want to ship something to Saudi Arabia from the UAE, the customer would understand that, hey, you don't need to pay first before they ship the product to me. So we collect the money, again, we have a PD, we have an API with the courier company, so we give them PDAs. Huh? Yeah, and then we collect the money, you're notified, and the customer, the voucher or the ticket or whatever service that you're providing is issued.
It's part of the pay for.
It's part of the pay for, yeah. So now we do around 3,000 transactions a month, and like I said, we started first with group buying, now we're getting into airlines. And with airlines, they have a 24-hour window for the reservation, so we really have to do it in 3 hours, which is basically the bullet service that we mentioned. So when we talked about friction because between the user and yourself, so friction could be the lack of payment methods, that I want to buy something from you but I can't because I don't have a credit card, or I have a credit card that's not working online for whatever reason. The second thing is the user experience itself. Does it happen, like Moustafa said, that there's banks, acquiring banks that basically the technology, when you click on Visa, you'll end up on National Bank of Abu Dhabi's page or Mashreq page. It's what we call redirection. We have what we call one-page checkout. So we build the payment page on your site. So what we call dynamic redirection. So the brand is consistent, the user experience is consistent. It will still say Souk.com or Carrefour or any of our merchants that uses that technology, but they don't actually leave your site. The transaction happens on your site. And recently we deployed an in-app purchase with mobile. I'm not going to talk about all these things. I'm going to talk about briefly what really works for you. And in-app payment, basically, again, you build the payment within your app. So I don't actually leave the app to make the transaction. The only time I leave the app to make the transaction if my credit card is 3D secure, meaning that I have to go to the bank and tell them my pet name and stuff like that. I'll show you guys. Actually, Emirates MBD now launched what they call double 3D secure. So you have your password, and they send you a token that you have to put on the page. Again, our market, around 30% of issuers have 3D secure on their card. But if you're planning to launch in Saudi Arabia, it's 90%. So it is a challenge. How do I make the user experience good for the customer? One of the things we do is that we have tokenization. So if they have a repeat buyer, they go and they put their card details once, and then they basically say, I'm going to save this card detail, and then the next time I come to buy, I basically find my card details tokenized, like XXXXX in the last 4 digits. All I have to do is put the last 3 digits CDC number, CVV number on the transaction, and then it goes through. So for your repeat buy, if you have an app and you're expecting the customer to pay over and over and over, you want to minimize that friction with the customer to let them, like Moustafa said, check out quickly. So how do I check out quickly? How do I minimize that friction? And I already talked about pay at home and pay at store, so I'm going to talk about it again. These are some of our merchants. We have, of course, hundreds of them. And every time we get a merchant, one of those big merchants, we also have small merchants, which we're going to talk about. But every time that merchant has a challenge, it becomes basically our challenge. And when we solve a problem for them, we actually end up solving for many merchants. So how do I manage security? You know, I'm a small startup, and I want to take credit card information. Everyone's telling me, go get PCI certification, go get PCI certification. That takes a year to get a PCI certification, and it takes a lot of money to hire a PCI auditor and so forth. So what we've done is that you can actually use our technology. PCI stands for Payment Card Industry Certification, where it enables a merchant to store credit card details. So instead of you storing the card details, I give you a wireframe on your site or your app, where I take that data and I do the token, and you don't have to be PCI certified. I do that for you. As Moustafa said, we're verified by MENA. We actually are launching Verified by Payfor, which is a buyer protection program. It's very similar to what you guys are doing, but it takes another step. So if I don't trust you as a merchant, it's kind of like VeriSign. You know, there is recourse with VeriSign and eTrust. If you feel like somebody violated your privacy or your security, you can always file a claim with VeriSign. So Verified by Payfor, if I buy something from you and you don't deliver the product or you deliver the wrong product, I can file a claim, and if I'm right, Payfor will refund the transaction. I can refund the card. So we hope with the launch of Verified by Payfor, hopefully by the end of this year, to our merchants, it will increase trust because the customer has recourse if they've never shopped on our site before. They can always file a claim with Verified by Payfor. We talk to the merchant, say what is the proof of delivery, show us the proof of delivery. You don't have proof of delivery, you haven't delivered, so we can actually refund or cancel the transaction. And managing risk, like I said in the beginning, that sometimes we feel like, oh, you know, we don't really want to talk about risk until you get a letter from Visa and Mastercard that says you've lost $10,000, and then you're really going to learn about risk. But we don't want you to get there. We want you to kind of think about it before. And I don't want to freak you out. I mean, risk in terms of fraud in this region, it's much lower than most of the other regions. But there are a lot of cases that we see over and over and over. So what are the costs of fraud? You have what we call direct financial costs, which I told you when Visa, Mastercard sends you a letter. We have what we call missed revenue and prevention costs. Missed revenue is that when, as Moustafa said, let's say you go to Network International and they kind of put a lot of business rules when customers are trying to check out and use their credit card, and for some reason it's not working, and the customer's calling like, I'm trying to use my card, but it's being declined, and I have money in my card, but I can't use it. Maybe this customer is actually trying to use a card from France, for example, and your payment gateway did not enable international cards. So that's what we call missed revenue. Of course, we try to manage risk, but we also try to minimize the missed revenue aspect. Air Arabia is one of our customers, and when we worked for them for 1 year, we actually ended up increasing the bottom line by 13%. Because we've increased acceptance ratio. Our acceptance ratio is that, let's say you have 10 people coming to your site, and 6 of them can succeed with the payment, 4 of them can't. That's basically what's an acceptance ratio. So the acceptance was, in the 60s, we've raised it in the 80s so that we're able to shift their marketing online to make people book their tickets online. So it's sad when you spend a lot of online marketing dollars and we want people to transact and they can't transact because of the small business rule that the bank is imposing on you. So Payfor, we actually work with you in terms of how we can mitigate the risk, because each sector is different in terms of how you manage risk. Airlines, telcos, e-commerce, they're the highest risk. But again, what are you selling? Are you selling a commodity like a smartphone, or are you selling this shirt? I mean, I can go and tell you, I sell the shirt for 500 dirhams. And it's like, I won't pay more than 100 dirhams for it. But if I come to you and say, here's an iPhone, it's for 2,000 dirhams offline, I'm going to give it to you for 1,500, you'll buy it from it. Whether I stole it, you don't know where I got it from. So that's basically what fraudsters do. They go for commodities, they go for Louis Vuitton bags, because they're resale value for these things. So these are some of the profiles of merchants, what we call the tolerant policy, that basically they lose a lot of money because they've enabled, there are basically no fraud rules whatsoever, and they don't have missed revenue or prevention costs. Prevention costs is basically when you hire someone to call the customer and say, send me the card details. I want a copy of the card, or I want your ID, or I want this, or I want that. That's what we call a prevention cost. The Thai policy is the complete opposite. A merchant's like, I don't lose any money, but only 30% of our customers are able to transact online. Right? So that's very, very bad. And then high cost but intensive on resources. That you're not losing money on financial cost or missed revenue, but you're spending $10,000 in salaries in order to verify all these transactions. So I'm not going to get into this because people, when I talk about fraud, they actually fall asleep. So what I can tell you is that we can manage the fraud up down to the item level. So the person who's buying the iPhone, I'm going to apply different business rules versus the one who's buying the shirt. Because I know that this shirt it's going to be difficult to resell, but I know that the commodity, so we actually have up to 20,000 business rules. If I'm a fraudster and I use my laptop, because they tend to use one laptop, I actually can do a device fingerprint on the device. So anytime they try to use that same laptop for a transaction, it will be declined. We have something called behavioral mapping. So if I'm only using my card once a month, and all of a sudden I'm using that card 10 times a week, it will flag that card as well. It will make sure that what is wrong with this card. So either we do further investigation or we decline the transaction. Forces you to use the so there's something called liability shift. Liability shift, there's a liability. So let's say there's fraud. Let's say I open my bill and I say, I didn't make this transaction. Who am I doing? I'm going to call my bank, which we call the issuing bank, the bank that issues the credit card. So the issuing bank will send it to the acquiring bank that acquired this transaction, which in this case would be National Bank of Abu Dhabi, Mashreq Bank, Network International. They say, please give me details on this transaction. If the bank didn't adhere to the 3D protocol, the merchant is liable. If the merchant did not adhere with the 3D protocol, the merchant is liable. I'm liable because I decided to override the 3D secure. So go ahead. You want to override 3D secure? Go ahead. But the liability shift is on the merchant. So we have something called smart 3D secure. So, for example, I'm working with an airline in Saudi Arabia, and we found that 50% of the transactions come from one issue, which is Rashki Bank. And that bank 3D secure server is always down in India, always. So what we do is like, okay, for all these BIN, which is what we call bank identification number, we say, do not enable 3D secure, but we have to do a rigorous risk analysis and see how many disputes they've had in the past with that particular bank. And we have an additional step that we call the bank and say, just want to verify this part of information, but not with the 3D secure. So you can, but you will own the transaction. So the minute you say, I want to disable this, fair enough, but you own it as a merchant. I'm not saying don't, but you have to do some analysis, which we do for our merchants as well. So how do I get started? How do I, So these are our acquiring banks right now, Mashreq, National Bank of Abu Dhabi. We are adding the ADIB this year, Abu Dhabi Islamic Bank, which is not live yet as an acquirer. And we have Saudi British Bank and National Bank of Egypt. And as Moustafa said, it's not an easy process. It's not fun, actually. They're going to ask you for a blood sample and assign your firstborn. So the first thing you need in order to do business with us, because we're not an aggregator, and I'm sure Sebastien will talk to you about the difference between an aggregator and a payment service provider. An aggregator, you don't need a legal setup, or you need very few documentation, but there is a restriction. You can only do $100,000 worth of transactions per card scheme. Visa, Mastercard, or they all both have different? It's Mastercard, yeah. So if you reach a certain limit in a year, they say, sorry, you cannot be an aggregator anymore, like I said, we shut you down. you need to go get your own payment gateway. But it is a great way to start instead of going sometimes through all that. Sometimes you want to start from day one, because with PayFort, it's not only about Visa, MasterCard, and American Express. Like I said, we also have other payment methods depending on the target audience that you have. So we help you also with the terms and conditions, meaning what is that and why is that important? So we actually look at all the terms and conditions on the website and then think of ways of if it's ambiguous. And is your return policy clear enough for the customer? Is your refund policy clear enough for the customer? What is the product that you're delivering? What is really the agreement, the contractual agreement you're getting into with the customer? Because the minute you say, oh, I didn't put this in, I didn't put that in, and somebody calls and says, I want to charge that back, and because the agreement that I signed doesn't say 1, 2, and 3, we really help you with that aspect of your business. And then we submit the information to the acquiring bank. Moustafa mentioned something about the security deposit. So we did one good thing and we did something that's not as good. So one thing, we've waived security deposit if you enter our startup program in all of our markets. If you're a startup, you come to the PayFort startup program, there's no more security deposit. So we saved that big rock that you put, but we created a small rock for you to manage. You have to open a bank account with this bank. And unfortunately, sometimes opening a bank account in the Arab world takes a month, it could take 2 months. So I promise you, we're still working on it and trying to fix all the big challenges in payment. But for now, at least, if you want to have your own payment gateway and you want to pay security deposit, we have waived that for you. And then you integrate with us, and we have over 30 shopping carts that are already integrated with, so you don't have to do it. Sometimes you need to, buy an extra plugin here and there to make it work. If you've done a lot of customization on your shopping cart or your booking engine or whatever, because you need to tell me that this transaction is 100 dirhams and it needs to have a transaction number, so that information needs to go from somewhere.
Do the acquiring banks have the rights to access to the bank account?
Do the acquiring banks have access to
Your bank account?
So, for the startup program, let's say if you're in Egypt, you get National Bank of Egypt, you open a bank account with National Bank of Egypt, so they have access to it. Here it's Mashreq Bank. So they have access in the sense like, of course they see what you're doing in the bank account, but maybe not on the acquiring team that looks at it, but maybe on the small business or corporate banking, they actually get to see what you're doing. And then we do a lot of testing, so we test different cards, different card types, like between secure and non-really secure, because sometimes things go wrong, and sometimes merchants don't even discover that. That's our promise. It's like we'll maximize the transaction acceptance ratio and making sure that the user experience is proper. So we have to actually test before we do that rigorously. And that's it. Thank you very much.
We will have the Q&A session at the end, so you can ask all the questions that once the two speakers have spoken. I just want to highlight 2 things before I give the mic to Sebastien. So Omar touched on two very important points that concern every e-commerce store owner, and I really encourage you to think about them. The first thing was the one-page checkout, right? So you have to understand that buying for any consumer is a very emotional decision. Even when you buy, it's very emotional for you. And sometimes you hesitate, and sometimes you decide not to continue with the process and so on. When you have a lengthy checkout process, which takes you through 6 or 7 screens to the time where you actually need to pay the payment decision or the actual payment, you get abandoned carts. You get people who abandon the checkout process and they don't continue. The one-page checkout, after lengthy analysis by the e-commerce community, has been discovered to be a very, very good solution in order to reduce your abandoned cart rates and to have people make purchases and commit very quickly. Now, this is cool if they're paying with a credit card, but what if they're paying using cash on delivery? Again, there's a way to optimize this, which is the second point that Omar touched on, which is the delivery speed. So if you're working with a courier, that takes 2 weeks to deliver your product, you can be sure that you get a return rate of maybe 70 or 80%. If you're working with a courier that gets second-day delivery when the buyer's decision is still fresh in their own mind, then there's a very significant chance that your sale will go through and will not be returned. So always think about these two things. How can I reduce the resistance in my checkout process, and this is the friction that Omar was talking about, and make it as simple as possible. And the one-page checkout is a beautiful way, and the fact that Pay4 supports that is very good news for you. And on the logistics side, how to make your deliveries as quick as possible from the point that the buyer makes the purchasing decision if you are going to support COD. And some of the couriers out there in the market, they actually publish the statistics that how reducing this time to delivery impacts your actual return rates and let's say your profitability. So this is all I have to say, and I'll just pass the mic to Sebastien.
So my brief was much easier. All I have to do is talk about checkout. The overriding theme that I kind of want to focus on, mainly from our perspective, is flexibility. To start with, I just want to correct one thing. Checkout is not an aggregator. We, in fact, are ourselves an acquiring bank. We have our own bin with Visa and Masterclass, which means that we are not a middleman between anyone. You apply with us, you get a merchant account with us, we hook you up directly, Visa, Mastercard, JCB, Amex, UnionPay, 75 alternative payment schemes around the world. If you're thinking of going global, you will not find a more comprehensive solution in the region for accepting payments on a global scale. We do offer something called the aggregator model, or IPSB, but this is done solely for the purpose of approving as many transactions as possible. A declined transaction where we can actually have an impact typically is the result of something called do not honor. This is the issuing bank saying, for whatever reason, we are not comfortable with the profile of this transaction. It could be the type of business you run, it could be the amount you're trying to acquire, it could be the acquiring bank. Two variables we can't change. We can't change your business, we can't change the amount that we're trying to acquire. The acquiring bank, we can change. If we get a do not honor response code, we dynamically cascade the same transaction to a partner bank and we try again. What you've done there is essentially try to trick the average risk engine in the issuing bank in order to maximize your approval ratio. Using this, and we tend to use banks that are slightly more local to the region we're trying to acquire in, you can get acceptance rates north of 95%, which means in transactions where you have a shot, a fair shot of a customer trying to pay, you're losing very few transactions, and this is just something why we still have partner banks within our network. Obviously, the first try will always be through checkout bin directly with Visa and Mastercard. Part of having your own bin, obviously, going back to this flexibility scheme, allows you to decide in-house how you want to underwrite your merchants. My risk team is part of checkout. I work with them every day. I meet most merchants I bring to them. We have a conversation. Have you met the guy? What is he trying to do? Do you trust him? Thereafter, we more or less allow the merchant to decide what he wants. We don't force you to do 3D Secure. We don't force you to take a hosted payment page. If you want full API integration, we can even do that without requiring you to go full PCI level 1, because PCI level 4, which is a very easy level to achieve, is sufficient for those purposes, so long as you are below certain thresholds in number of transactions. This flexibility extends to many things, actually. You can decide in the gateway how you want to set up your risk settings. You can do velocity checks, you can do IP mismatch rules, you can manipulate these things yourself. We trust you as the merchant who is ultimately the bearer of risk in these transactions to make up your own mind and tailor it to how you think is most appropriate to your business. If you want to accept many, many currencies, it's possible. We can process any currency in the world. If you prefer to use the main settlement currencies within Visa and Mastercard, USD, Euro, Swiss franc, etc., it's possible. There is not a scenario, so long as it doesn't contravene Visa guidelines or some form of anti-money laundering, where I will say no to you. Typically, in the region, what we found when we came here is that there are certain lines of business where the acquiring banks locally have, probably through bad experience in the past, insanely high security deposits. or just won't even work with you. If you're selling electronic gadgets online these days, it's very, very difficult to get approved by an acquiring bank. Not only can I say with a high degree of certainty that we will work with you, I'll also tell you from the start that we are not going to ask for a security deposit unless you prefer to pay one. We have something called a rolling reserve, which for startups is a much more friendly approach. Essentially, we hold back a percentage of revenue that you process through us for the period of the chargeback window, which is 28 weeks, at which point it is released to you. Initially, for high-risk merchants, this would be 10%. After 6 months, we review, and we can reduce to 5%. What we've seen so far in the UAE, and actually across the region, is if you're somewhat smart about your risk settings, you can minimize your fraud to a great degree. It's not like what we see in Asia or Latin American countries. That's what I'm trying to say. I want to keep it sweet and short because I know you have a lot of questions and I'd rather move on to that as quickly as possible. Therefore, just to sort of recap briefly, Checkout is truly a one-stop solution connected directly to Visa and Mastercard. We are not a middleman. We'll more or less let you have what you want if it's feasible. All technology we use is built in-house. We have developers in-house that will build things for you if we do not currently have what you need. These things are some of the ways that we're trying to bring a bit of flexibility to the local market. I'll wrap up with that and I'll make this up. Thank you.
Thanks, Sebastien. Thank you. I recommend, or I suggest, that we take a coffee break before the Q&A session, right? Because everybody's half asleep. Let's have some coffee. We'll have a small Q&A session, and you can go back to networking. There's always more time for networking. Don't worry about it. Networking, coffee, anything you want. Let's just get through the Q&A. So please have a seat. Would you like to sit for audience? You can have a look at the Q&A. You can ask as many questions as you like to answer. Right? Omar? So, as always, the feedback that we always get is that I get a lot of emails at the end of every session. Moustafa, you didn't give enough time for Q&A. That's always it's all my fault. It's always my fault, but I accept it and try to fix it. So we want to have a short Q&A session with our audience. payments is a critical part of your operation, and as you saw from today's presentation, and today's talks, that the market has evolved significantly since it was in the past, and I hope some of you got some information that you didn't have before. But I'm sure you have a lot of unanswered questions as well, and I would like to give you the opportunity to ask whatever you want, and our panel of experienced gurus will answer your questions. So, who wants to go first? Who has questions? Okay.
I have a question in general. This question is not addressed specifically to any of the experts, but I wanted to ask what you think is the applicability of online payments to B2B setups, specifically in this region. And in your experience, whether you have seen a lot of cases where companies selling to other companies actively accept payments. To what extent do you think this subject is important or valid for the B2B setups?
It's actually a lot of companies now are thinking, you know, what am I going to do with my online channel if they're selling offline? There are some challenges that we're facing as a payment gateway when we're working with the company in terms of B2Bs, that a lot of the acquiring banks and issuing banks is that if it's a corporate credit card, they want the merchant to take the risk. That's the first thing. That's the biggest challenge.
Is it a corporate credit card?
If it's a Visa, Mastercard, they're actually saying that mitigate the risk is on the merchant. American Express is not actually. There's no liability shift on the merchant. A lot of the B2B that we're looking at right now, a lot of them are what we call you have certain customers that you need to charge them, for a specific amount on a monthly basis. So we do that as well. But again, I think in the region still the acquiring banks are still a bit hesitant with corporate credit cards, particularly. I'm sure you guys, I don't know if you guys do that or not.
Just expanding that a little bit, there aren't actually that many corporate cards issued. Most people end up using a private card and then just expensing it back. The other issue that is just worth bearing in mind is B2B services typically could often be larger average transaction amounts. And there you're going to very quickly run into authorization problems, because issuing banks, if you're trying to put $15,000 through a credit card, it's not going to work. So you need to be kind of smart how you set that up. But that's otherwise I agree with it.
If I rephrase it a little, is there such a thing at all in the Middle East as online payments for the B2B segment?
Yes, of course.
E-commerce.
Like Sebastien said, it's at the end of the day, it's a card. So we've helped Ferrari World, for example, and Yas Auto World, because they have a lot of travel agents that they actually use their corporate credit cards online, and from other parts of the world. Then they want to book because they don't have a credit limit or a credit facility with Ferrari World, and they want to pay for those tickets. So we've developed what we call a whitelist. So we ask the merchant to actually use their card, and the first time they use the card, the transaction is declined, and we know which the transaction number, and then we go and from a back office, we put that card on what we call a whitelist. So we know that this card has been verified by the corporate team of Ferrari and Yas Auto. So although
tickets.
In this case, I'm giving you an example for that case, yeah, because they don't have a credit term, so they have to prepay all the tickets if they're sending tourists to the park.
I'd like to add my 2 cents. My name is Omar, by the way, because I wasn't part of the presentation. So B2B is a stretch. What we're talking about and what Omar is talking about is more from a customer's perspective of the issuing bank and the card that's been issued and how to process that. But from a merchant's perspective, which I suspect you are, you're a business and you want to sell to other businesses, it's going to have to be treated as it would be in a B2C setting. and with, like Sebastien just mentioned, be mindful of your average transaction values, because in a B2B setting, you're selling to other businesses and your average transaction values are probably going to be higher than they would be when you're selling to an individual customer. So as long as your back office or your tools, your fraud checks, etc., with your gateway or whoever it is you're using, are configured accordingly to accept larger transaction values, then there shouldn't be a problem. You treat it just like a B2C.
I think, I'm not sure if this is correct, the limits, as you said, is $10,000 before it's auto-decline transactions.
Auto-decline is a strong word, but above $10,000, you'll start having many issuing banks in a consumer card environment saying, we don't want to honor this transaction.
So that would be from the person, the issuing bank?
Yes.
So the card holder's bank. In this case, if it is a card that's being used regularly to buy in a B2B environment, then there wouldn't be a problem. So again, there's no exact science, there's no exact formula. It's basically trend, and trend analysis is what issuing banks would look at. And if your trend, your customer's trend is spending money on that card, or what they're spending on your website is within that trend, then it's fine. It could be 10, it could be 12,000, it could be even 20,000.
I don't know when things changed. When I received my first credit card in UAE, and this was about 9 years ago, there was no such thing as a corporate credit card. So the bank, despite I applied to the bank to open an account as an owner of the company, and at the same time I requested a credit card which would be in the name of the company. They said we don't have such thing.
Yeah.
Things changed probably, and I have not been checking since my first initial request was rejected. But if there is, if I hold the credit card and I have my name on this credit card, and I want to buy from a business, will this transaction go through, or this will get again a lot scrutinized?
I think it will depend on the business.
I buy on behalf of my business. I use my personal credit card. I buy from another business. Is this a working scenario, or this is no working scenario? It works.
Yeah.
Sure. So it depends on your pattern, because it depends on how you use your credit card over time as well.
And I think Moustafa is going to organize another event for card issuing. Get into more detail.
Yeah, absolutely. Why not?
I have a question for Mr. Sebastien. I'm interested to know about checkout.com. I don't really know it very much, so I'd like to know how does it work, what is it exactly? If I have an online business, how I can take advantage of it? How can you help me? What services does it offer? And is it like PayPal, or I just would like to understand what it is exactly.
It's not really like PayPal.
Okay.
I'm going to split the answer into two things. From the person shopping on your website's point of view, it will be very similar to what you'd see with any of the local payment service providers. So we give you code that allows you to collect card information on your website. We post that into Visa or Mastercard, and thus enable you to accept payments online. So there's no e-wallet, you don't have to log in, create an account with an email address, anything like that. It's straight Visa or Mastercard, Amex, whatever you're accepting. They can enter those details and buy them in there. From your experience, as in what happens afterwards, the transaction will flow typically T+3, so 3 days after that purchase has been made, through the Visa network into your merchant account, which is held with checkout.com. So we have client accounts where all money that we process for clients on a global basis flows into. There it sits for as long as you've asked us to hold on to it before settling you. And settlement is done with a wire transfer into whatever account you want. We don't force you to work with any of the, there's no particular bank we need you to work with. We can settle you into any account globally. So that's kind of the transaction flow.
Thanks, Sebastien. Any other questions? Right. Yeah.
Yes. I was wondering for PayFort, do you need a physical office to set up a PayFort?
I think, yes. I mean, because of the legal requirements in the UAE, a business needs to have a physical office for the bank, actually, because the bank, they do what we call a site inspection. They'll have to come in and actually see if you have a physical office. You can have a different address than the ones that you incorporate in, but at the end of the day, they'll need a physical office.
What if you have like a flexi desk?
That would qualify.
That would qualify?
Yeah. In some, it depends on the free zone, which free zone.
Yeah.
Some free zones qualify, some free zones don't qualify.
Can you name it, please?
Like Ras Al Khaimah? Would that
Ras Al
qualify?
Khaimah doesn't qualify.
No?
DMCC?
The FCC does.
Sharjah?
Huh?
Sharjah Free Zone Airport?
I'm not sure. We have to check with the banks.
What would you have?
I don't know what to do there as well. But I know the FCC qualifies and Ras Al Khaimah doesn't.
Just to add here, the question you asked, while very poignant, is actually for the acquiring bank. They're the ones who actually have to underwrite you. And they're the ones where the merchant bank, whatever you want to call it, you want to open your merchant account with. They're the ones who make the rules. They're in the dark ages in this country. Right? So it's very touchy-feely. Even if you have an office or a flexi office in one of these approved free zones, it may well be, if they don't like the way you look, you could probably get turned down. So nobody really knows what goes on behind the scenes in these companies and in these banks and their compliance and risk departments. So they don't publish their formula. They don't just say you do this, you tick this box and you're in. And I think that's part of the problem that we have here. You don't know where the goalposts are. So just make sure that what I have, from my experience, what I found that these banks do things like visits, site visits, but then they also they just get a feel for what you're doing in your business. If it's a flexi office, the guy that comes to see you from the compliance department may be okay with it. The other guy may not. So it's not a hard and fast thing.
So you think I should still try, or?
Well, there's no harm in trying.
We can have a discussion. At least we can talk to the bank and say this is the situation, this is the case, and then we can take it from there.
And you only work with 2 banks, I believe.
In the UAE, yes. Right now, yes, and then the third one is coming online. Hopefully, when they go live, I'll play Islamic Bank.
So, from my experience, when it comes to dealing with acquiring banks, there's no guarantee, there's no science, nobody can answer on their behalf. At the end of the day, you need to go through the process, and some days they will say yes, some days they will say no. I'm serious. It's
honestly,
it's as simple like that.
I mean, one thing that we noticed when we came into this industry in the airport, that as you said, that the bank is like, no, why no? Just no. So we put our lobbying hat on. So the first thing we've done is actually went to all the acquiring banks and gave them a hefty security deposit. So they don't ask any startup anymore for a security deposit. They still have to. You still have to go through compliance. You still have to go through the AML requirements. And at the end of the day, you'll open a bank account with them. So we're working on that second challenge at the moment right now.
Because the whole point of opening the e-commerce is because I really don't need a physical office. That's the whole point.
So yes and no. I mean, you could have a physical office, but at the end of the day, they want to make sure that they're doing business with a legitimate company. So if you say, if banks get nervous, like you just mentioned, they don't see a physical office, like, oh, I got you, you're going to run away. So, and again, you have to also consider that the UAE is a transit society. So people do come set up something, and you don't know the good from the bad, and the banks, unfortunately, has been hurt in the past with that. So how we mitigate that risk, that's what we do when we work with PayFort, is that we try to give that case. I mean, we've had a bank in Egypt rejected a merchant because they said their business model was too ambiguous. And what does that mean? What do you mean ambiguous? Why did you reject them? So we found out that they actually don't know what the business does. So we said, okay, next time don't reject the business and ask more questions. And actually they approved them 2 days later. So sometimes they just...
So we tackle.
Exactly. I said, so every time somebody wants to disrupt, you're going to decline the business because they want to disrupt the market. But there's a long way ahead of us in order to work with acquiring banks. And I don't want the acquiring bank to be the evil. At the end of the day, they're a bank and they're trying to protect the assets that they hold. So we need to work with them in order to kind of like, you know, make them a bit comfortable and meet them halfway.
And the fact that we don't have very clear laws and regulations for e-commerce in the region doesn't help the banks as well, right? So in more mature markets where there are very well established rules and regulations for e-commerce, things become a lot more smoother. But in our region, they don't have that. They have
So TCOM just released it. So in the past there was no business practice or business activity as e-commerce. Now TCOM has e-commerce as that you can apply for an e-commerce license. So that would help you because, and you know,
so they can sell you office space.
Yeah.
And do what they're best at, which is be a real estate agent. But yeah, I mean, you just need to be lucky. You just need to be lucky. They're writing the rules as we go along, and they have burnt their fingers because they didn't do things right in the past. And just like with anything here, whether it's RERA or RTA or whatever it is, I mean, every day the rules are evolving and based usually on reactive circumstances rather than proactive. So there's no rule book that they've just downloaded and replicated from Europe or the States. They're writing it based on experiences that they have, good and bad.
Right, before? If I understood you correctly, you dismissed the requirement to your customers to have PCI certification. Do you require any SSL certificates or enhanced validation certificates placed onto the shopping carts?
Well, our system has the SSL certification. So basically what we do is we give you a wireframe inside your checkout page. So when the customer is actually using that area, they're actually using, you know, the data goes to our server directly. So it will go through our SSL certification.
I should have a certificate, right? Because I have to maintain the encrypted connection between my customer's session and my server.
You don't need an SSL.
Or it's encryption between the frame, which basically holds your content, and the customer's browser.
I'm sorry?
You build one-page checkout processes for the customers.
Yeah.
And as far as I understand, technically, this is the frame on my page. Okay, so the content of this frame is SSL encrypted. So my website might not need to have any certificates at all?
No. And if you give me your email, I can send you the manual that shows the host-to-host connection in order to implement the one-page checkout. And it has all the details.
I think you can take one more question, just for time.
My name is Deepak. We have businesses out here, manufacturing and IT. Now I want to know what will it cost all our products on the e-commerce side per transaction. Maybe $1,000 or $10,000, but it's a B2C.
The cost per transaction?
Yeah, per transaction.
So for us, at least we pay with two costs, is the interchange which we pay to the bank, percentage. And in return, the bank also pays the card scheme, which is Visa and Mastercard. And then we charge a per transaction fee, depending on the risk profile of the merchant, depending on the volume of the merchant. So that's something that we would give to you after we sit down with you and come up with the business case.
Same thing goes for checkout.
Yeah, we have simple pricing method. It's the same thing. So there's a percentage element, which for startups is always 2.89%. And then 2.89%, and then we have a transaction amount which is 89 fils per transaction, and that's it. We have no monthly fees, there's no annual subscription. This gives you full access to all our products, that's it.
Do you know anybody who uses to check out.com? Right? To check out, yeah. How much are you paying per transaction?
3.99.
3.99?
I have an offer on the rental. You got in, then we're to check out. Yes.
No, to check out now it's 5.25.
Yeah, it's 5.25 now.
This year it's 5.25, and that's if you approved before. Before I was dealing in 3.25. Before 9 years, I was using it for 3.25, but now it's 5.25.
Yeah. This can cut a major hole in your and your margins. And as you scale, this becomes a major issue as well.
But not just that, Moustafa pointed out in his presentation in the beginning about using these solutions, these offshore solutions, and sometimes they can be quite unpredictable and shut down. And there is a reason for that. And it's, without going into too much detail, just imagine that Visa and MasterCard have broken the world down into several different regions, very much like the Olympic circles. And a bank or an acquirer or a payment processor can only do business with a company that's domiciled in that region and registered in that region. These guys are registered in states to check out. And so what they're technically doing is incorrect. Technically, the way they're operating, they're not supposed to be able to operate here. If they're going to be offering that service, they need to be hooked up with one of the 3 acquirers in this region, which they're not. And that's the reason why they get shut down. And merchants who used to check out and people like to check out very often all of a sudden get a notice saying, sorry, we're not going to be able to accept Visa transactions anymore.
So I think for today, that should sum it up. I want to thank you all for coming here today, and I want to give a big round of applause for our speakers for their time. Before you go, I want to give you a tip. So there is a public parking here. I don't know why nobody knows about it. You don't need to go around the street. There's a very big area just beside the Hilton where you can park. So because many people send me very angry emails and messages, and I was insulted a lot of times, you know, over the past 2.5 hours by angry visitors.
Nothing to do with parking.
Yeah, so there is a big public parking, guys. You don't need to shop in this. There is something available for everyone. But thank you all for making it here, and I look forward to see you the next time. Thank you. Have a nice evening.